All right, let's dive right in. Today, we're going to pull back the curtain on the world of banking, but not in the way you might think. We're talking about the hidden value in your everyday financial moves. You know, the little things you do without a second thought. Turns out, they're part of a profit stream you've probably never even heard of.
Yeah. See, it's a system that's humming along right beneath the surface of our daily lives, totally silent, completely in the background. And it really all kicks off with this simple, kind of conspiratorial idea. Nobody's supposed to tell you this.
I know, that sounds crazy, doesn't it? We all think banks make their money from fees, from loans, from interest rates. But what if I told you they can actually generate value from your account even when a transaction gets declined? Or, get this, even when you don't make a transaction at all. Just think about your day. You pull out your phone to check your balance. You tap your card to grab a coffee. Maybe you try to buy something online and, whoops, declined. To you, those are just moments. They're nothing. But to the financial system, every single one of them is a tiny, valuable piece of data.
So what is this hidden value we're talking about? Well, it really boils down to one very powerful idea. In our modern economy, your data, your behavioral data, has become the new gold.
The official term for this is interchange data value. I know, it's a bit of a mouthful, but the concept is actually pretty simple. It's the money that can be made from the patterns your financial habits create. And here's the key part. It includes all the stuff that doesn't even end in a purchase. It's not about what you bought. It's about the story your actions tell.
And that right there is the fundamental shift. See, the old way was about charging you directly for things. The new way, this invisible engine, is all about packaging up the anonymous patterns of your behavior and selling that to other companies.
Now don't worry, your name is stripped away from all this. But even when it's anonymous, this data reveals so much. It can show how often people are spending, where they pause before making a big purchase, even things like what time of day people are most likely to be broke or when they're most likely to splurge. When you put millions of people's data together, you get this incredibly detailed, real-time map of the entire economy.
So if our collective behavior is the product being sold, who's buying it? Well, the answer is a huge, and I mean huge, prediction market where all this raw data gets transformed into some seriously powerful financial intelligence.
And the buyers? They're the major players you'd expect. You've got hedge funds who are desperate to predict which way the market is going to move. You've got new fintech companies trying to build the next big app. And of course, you've got advertisers who want to know exactly when and where to put an ad in front of you. They're all paying for a peek into the future.
The process itself is surprisingly simple. Step 1, you collect all the raw, anonymous data from our millions of taps, swipes, and balance checks. Step 2, you run all that data through powerful algorithms to find the hidden patterns. And then, step 3, you use those patterns to predict what's about to happen next.
Now, what they can predict is pretty staggering. It's like having an economic crystal ball. By seeing that spending has suddenly slowed down at a big retail chain, they can predict that company's going to have a bad quarter, long before any official report comes out. They can see inflation creeping up in real time, weeks before the government even releases the numbers. Okay, so you might be thinking, wait a minute. Isn't that insider trading? It's a fair question, but there's a really critical difference. Insider trading is when you use specific, secret info about one company to get an edge. And yes, that's super illegal. This is totally different. This is about analyzing broad, anonymous trends from millions of people all at once. It's not illegal. It's just invisible to most of us.
When you put all this together, it leads to a pretty fundamental question about how we live our financial lives now. What is our real relationship with our bank?
And the answer, as weird as it might sound, is becoming clearer and clearer. In this new data-driven world, you're not just the customer anymore.
This is really the heart of it. You think you're just a customer using a service, but in reality, you're also the product being sold. Every time you interact with the system, you're creating a valuable asset, your behavior. The service you get is convenience. The product you create is the valuable insight that comes from your patterns.
And you know, this matters now more than ever. Why? Because we are rapidly becoming a cashless society. Every time you pay for something, it's becoming a digital transaction. And as cash fades away, every single move we make becomes another data point. This constant fire hose of data just makes these predictive models more and more accurate and way more valuable.
So we'll leave you with this thought. The convenience of just tapping our phone or our card is amazing, right? It's undeniable. But as we've just seen, there's an invisible transaction happening in the background every single time. And it really makes you wonder, as we race towards this totally cashless world,
What's the true price we're paying for all this convenience?